panel discussion on insurance, how to finally win over the African consumer. My name is Thijsbert Kremers-Tetrvedi. I'm a managing director and partner for BCG in Johannesburg. I lead our financial services and insurance practice across the African continent. Today, for this panel, I'm joined by Rashidat Adebisi, who is the Deputy General Manager for AXA Mansard, by Dr. Corneille Karekezi, who is the Group Managing Director and CEO for Africa We, and by Junior Ngulubu, who is the former Vice Chairman for Sanlam Pan Africa. We will also be joined with an interview by Suleimane Gning, who is the CEO for Asuraf, an insurtech with a Pan-African reach. Before I turn to the panel and we start the discussion, I would like to tee off the discussion with a little bit of a view on what is our starting position, why do we need to win over the African consumers, and what are our challenges, plus tee up a few of the ideas of how we could overcome these barriers and finally create success with mass insurance in Africa. Next slide, please. On this graph, what we see is three types of information. It shows for African countries and a subset of that, what is the penetration of gross written premiums over GDP per country. The bubble sizes indicate the size of the insurance market, and on the horizontal axis, we show what is the growth that is expected for the next 5 years. And what we see in this graph, no surprise, is that South Africa is not only the dominant market, but it also by far has the largest penetration. Below that, Namibia is somewhere behind following in terms of penetration, and Morocco is somewhere behind following in size of the market, but neither of these are the fastest growing. Many other countries are faster growing. Now, this is not new. It does provide a very attractive marketplace for growth of insurance, but at the same time, the long-term effort to replicate the success of the South African insurance industry on the African continent has so far not bridged the gap. So what is lacking? Maybe on the next slide. We have put 3 discussion starters to unlock the potential. First, there is an eminent need to understand frictions and needs and to understand customers in their localization. And with the onset of digital and there with the ability to harvest and process data, there may be a next level that we can achieve in understanding these customers and their customer journeys. We then also need to tailor valuable solutions to these customers and understanding how those will meet their needs and what is the right moment to approach these customers. A second element to unlock the potential is around the development of holistic propositions. And we like to say that we have to move from insuring against a claim, a damage, mortality, to an assurance of mobility, a valuable life, a pension, education. Move towards a holistic need and a proposition that helps our customers in realizing that holistic need or friction. That also means in those cases, insurance is part of a broader solution. It's not a standalone product, but it's integrated in a total solution that delivers that assurance of a need. And a third element is we have to create low-cost access. And with digital and mobile technologies, there may be a next level that we can reach in this to increase financial inclusion, but also to create a low-cost digital or bionic distribution. And with bionic, we mean a digital approach with a last mile based on human interaction, because actually globally, but especially in Africa, it is really important to do that last mile to reach customers, to give them the final piece of advice and to be in contact with these customers. So the question becomes, how can we combine these three steps at affordable cost? And as a side question or leitmotif on these, what role do regulators have to play? Do we have to intensify regulation to stimulate insurance or relieve it in areas? Maybe we skip to the next slide. As we think about the future of insurance in Africa, and we think about more holistic propositions on the vertical axis versus single insurance product propositions as a discriminator, and on the bottom axis we think about insurance as a product versus customer contact and relationship management. We've drawn 4 quadrants of 4 possible worlds, plays that insurers can entertain to be successful in the new world. On the bottom, there are more conventional models where an insurer can either be a risk carrier, back-end operator hidden behind a broker or a bank or a telco, or it can be the direct insurer in direct contact with customers. On the top, there may be an opportunity to think of those more holistic solutions for customer needs around education, around mortality and funeral, around mobility. And an insurer can play a role as an orchestrator, or it can play a role as a participant, being successful in the ecosystems developed by others. We believe all these 4 plays will exist in parallel, and insurers can play in all 4 with dedicated business models. At the same time, being successful in either of these markets or plays requires insurers to develop specific propositions and specific business models to be successful. Let me pause it there and turn to our panel and started the discussion on how do we finally win over consumers. And I wanted to start in the 3 topics for unlocking our potential around understanding customer needs. And maybe Rashidat, I'll first turn to you. Welcome to this panel. I'm very excited to have you. If you think about customer needs, what and how to develop tailored propositions for that, what comes to mind for you on how to break the deadlock in Africa?
Thank you very much, Thijsbert. I would say to you that really, I mean, I think we have so much to do still, but it's really about listening to the customers. That's what comes to me, and understanding the cultural nuances. I believe that it's so easy to copy and paste, try to plug and play, but this is actually not the reality for us here in Africa. In Nigeria, for example, what we've seen is that understanding the real ecosystem that people play in, understanding how they live, and making sure that the insurance solutions address their needs in the way they see it and they need it is something we haven't done well. We've been able to cater to the higher end of the markets, but we haven't really reached the middle income as well as the lower income segments who truly need protection. And when you think about the fact that we really don't have any safety net in Nigeria and many African countries from social security, we have so much to do, but we haven't been listening enough. So listening, playing, understanding, and running the right level of engagement will be wonderful for us in terms of the impact. Thank you.
Thank you, Rashidat. Dr. Karekezi, from your viewpoint, on this dimension of unlocking sort of our understanding of customer needs and finding these propositions that also sort of open up the middle and lower incomes, and maybe combining it with sort of the element of low cost access. Any views from your side to add?
So thank you very much, Thijsbert. It has been a very difficult discussion for many decades among ourselves insurers, how to increase the insurance penetration or the insurance density. We know that there are many things involved. You have talked about ecosystem. I will break into two types of ecosystem. There is an outside ecosystem, which is between ourselves and the banking sector, the financial inclusion, the government, the regulator, and so on. Then there is our internal ecosystem, ourselves as insurers, because there are things we have tried over the years to increase acceptance and awareness of insurance and purchase of insurance. But we have found so many difficulties and obstacles. I will mention the affordability. We should not forget that. Let me start with the high end, which Rashidat has mentioned. I find that we have not even done much in that, because penetration of insurance penetration, it's a percentage of the GDP, and we know that the GDP is mainly from the formal sector. Even in the formal sector, our penetration is very, very, very small. So you can think about all the SMEs, for example. So maybe we'll talk later about the low-income population. That's another side of this. So I think that we have to be innovative. We have to be innovative. Education, orchestrating those two ecosystems, our internal ecosystem and the outside ecosystem, to continue to remove all the obstacles. If you want, we can talk about the obstacles. There are many, but internally we have the social, cultural realities, the culture, we have the affordability, we have the trust, we have the profitability of insurance companies themselves. If they are not profitable, they will not go far. And we have other issues of proximities which are being resolved by the digitalization. So that's my contribution, but I believe that the two ecosystems must be worked on. Thank you very much.
Thank you, Corneille. And I think what that says is there is a whole set of equations we need to solve all at once, because we need to find these more sort of dedicated solutions, more fitting to these customer needs, and at the same time find the solution for the low affordability and actually the quite low premiums that are required. So in your view, is there any role that also a government should be playing in this?
Yeah, I think so. I think that we have to take a government as in two roles they can play. One is the development of the insurance industry. It should be a priority like any other sector of our social and economic life. Because if insurance is not developed, so the government will be the only last resort when there are catastrophes, when there are violences, when there are other things. In any case, if our economies or assets are destroyed, so the government will lose even taxes. So I've had issues with the ministers of finance many times when I meet them. I always tell them that they are not doing enough at all, because insurance sector is not given the full attention like other sectors. Second, insurance, the government should also be a buyer of insurance, at least for that low income. We know that low income population, it takes time for them to understand insurance as a risk management tool, and they will not pay the premium for the first time. So there are mechanisms like premium subsidies in the first years, which can help, and only government can do that, or other NGOs or multilateral institutions. So there is also the aggregation. So those small, let's call it small insurable person, it's difficult to go for $1 premium. Even if you have tools like digital channels, we need to aggregate them. So here I can see issues of cooperatives, issues of professional bodies. Government can help to organize. Those are the ecosystem we cannot orchestrate as insurers, because they request authority to do that. You need authority to do that. So government can be really playing a role, which is proactive in the sharing of data. For example, we have problem of risk models which are not existing. If you want to insure flood at the moment, you don't have enough data. You don't have enough data even in our big cities. So governments should help us to access data to know what are, for example, the economic losses, what our government are losing in terms of infrastructure destroyed by excessive rain. For example, we don't know what they are paying in their budget, but if we access those data, so there is a need of partnership, but really benevolent partnership. Let me say that. Thank you.
Thank you for those comments. And Mr. Ngulu, to include you in this discussion, so if you think about sort of all these facets, customer needs, sort of the role of the government, how do we combine sort of the right tension between sort of being designing the right products for the right customers on the one hand, and on the other hand, sort of getting the right stimulus from a government, which may sort of be a little bit of a break on true innovation. So how do you look at that equilibrium, and how do we manage that in an African context?
Thank you very much, Thijsbert. I think for me, what is interesting is your opening slides when you showed the insurance penetration, and clearly you could see South Africa as an outlier. And also to add on to what Kone said in terms of the importance of GDP, let's talk of per capita incomes. That is probably the single largest driver of insurance penetration. So if you look at small countries in terms of population, like you mentioned Namibia, look at Botswana, look at Mauritius. Small populations, high per capita incomes, but they've got very high, on a relative basis, insurance penetration. So number one is per capita incomes, it's GDP, it's economic development. That's one of the biggest drivers. And then if you look at South Africa, I would say it's a bit of an anomaly on the African continent, and there's a reason for it. One of the main reasons, besides the large economy and the per capita incomes, there is no government provision for retirement in South Africa. It's always been in private hands, in the private sector. So there is a massive retirement or pension fund industry in the country. And then in that context, you also have the government employees pension fund, which is more than 100 years old. It is the only government employee pension fund in the world that is fully funded. Most governments go on a pay-as-you-go. The asset management company, PIC, manages $125 billion of assets under management belonging to civil servants. So if you look at the South African premium volumes and you include the pension industry, it's massive. And then lastly, if you look at the personal lines insurance, that book in the South African context, it's also very, very large. So those are the key drivers of this very high insurance penetration. Then why is it not the same in the rest of the continent? And my comments are limited to the retail sector. So my thesis would be, firstly, in many of our countries, the per capita incomes are still not where they should be, still growing. Also, more importantly, fast growing per capita incomes. That's a very important point. So it points to more potential in the rest of the continent going forward. Then once one has tackled the issue of per capita incomes, then one has to drill down to the actual needs of the insureds in terms of personal lines. I think this is the one part whereas insurers, we can certainly still do a lot more. Understanding the nuances of each country and its culture and what drives the society in terms of its needs. And also, we also have to understand the competing needs for that dollar the poor person has got at their disposal. Do they buy an insurance product? Do they pay school fees? Do they send a sick child to a clinic? So there are many competing needs for this dollar. Besides the competing needs for this dollar, these societies have also developed what I call coping mechanisms. If my informal settlement bends down, chances are my neighbors will help me to rebuild it faster than I can lodge an insurance claim. That's how societies have been coping. When I grew up, we had burial societies where families and extended families put money together. Someone trusted kept the money. Whenever there was a bereavement, the funds came from that pool. And then later on, the insurance industry came with insurance policies. There you have what I would call a felt need. Once you identify a felt need, you don't have to do too much marketing. Let me use another example. Legal expenses insurance is one of the most popular products in South Africa among even the poor. Why? Because under apartheid, a black person could be arrested for anything at any time. So you needed your lawyer on speed dial in this country. And you cannot sell that policy to other countries on the continent because the need was simply not there. So I'm using these two product lines as examples of what happens when your product meets a felt need. Then you can talk of distribution, you can talk of proper product design, digitization. Those things on their own will not meet a client's need. It's the key is the product. Where does the government come in if I close? I would change the logic the other way. How do we help the insured? And how does the government help us to help the insured? Not how does the government help insurance companies? They won't move. They just want tax from us. So let's take, for example, agricultural insurance. In many instances where you've got things like drought insurance, you're meeting the needs of farmers, and governments are sometimes happy to subsidize the premiums and provide other support mechanisms. So as an industry, we should turn the logic the other way. There is a need. How do we get the government to help? Then we end up with what I would call social good, insurance products that are a social good. Then it's easy to engage the government in that conversation. I think I'd stop there, Thijsbert, but very fascinating topic.
Yeah, and Junior, thank you for that. And I think it's very interesting what you've commented on, which is sort of you bring together sort of a need of an insured person, a need of a community, yeah, in the funeral environment, and a need of a society in terms of the drought insurance, and then see sort of, okay, where is in that collective need the financial benefit. So I think that's a very rich thing to embrace, because it aligns needs.
Yes.
And then within those needs, potentially we can find a financially attractive way to solve it.
Exactly.
Back to the basics of insurance, of mutualization.
Right.
So on that thought, I actually wanted to turn to Suleimane Gning, the CEO of AssureTech, and also on this topic, Suleimane, of sort of why is it so difficult to have our customers in Africa engage with insurance? I would like to ask you for your perspective as an InsurTech challenging this market.
Hello, Tijsberg.
Hello.
Hello. Hello, Tijsberg. Can you hear me?
I can hear you. Yes.
Yeah.
You have,
Sorry for this little mute moment. Thanks for having me. And
you're back on mute, Soleimani. So I propose that we actually turn back to the panel, and I revisit you in 5 or 10 minutes. Hopefully we can then hear you, because it'd be wonderful to hear your perspectives on these questions. Maybe to turn it back, because sort of where we left it is on that sort of combination of these different needs, and really understanding sort of what the people in local communities require, but also what these local communities themselves require, and what the beneficial effect is for sort of a country, and therewith the incentive maybe for a regulator or a government to help subsidize, as you said, Junior, because I think there is a virtuous circle there that we could explore together. Maybe Rashidat or Dr. Karakesi, any views from your side on that?
Well, thanks, Tijsberg. Can I just say to you that the question should be turned the other way around. It's not why customers are not engaging with us. It's why are we not engaging with customers? I think customers have evolved very quickly in Africa, in Nigeria, in any other countries around us. They are engaging with telcos. They are engaging with, tech-related solutions. So why are they not engaging with us? Because we haven't positioned ourselves to engage with them well. We've been used to just an anniversary of renewals of insurance to reach out to clients just before it's due for renewal. So there's just so much more for us to deliver on. And it's actually for us to ensure that we're engaging differently. We're opening up, we're having a different team of people, we're approaching them in a much more, I would say much more modern manner, right? People want to have instant response. Many of us, you still need to sign forms, have long engagements, get your health checked, get, a health assessment before you can start a policy. But people are enjoying services very quickly and instantly. So when you consider this, so the big job for the insurers are that we're not engaging enough. We're not as, some people say, sexy enough. We haven't opened up our ecosystem. We've been quite traditional in our engagement methodologies. What can we do differently? You don't even need to reinvent the wheel. You can see how everyone else is being open, how we reach out, how we ensure that people can communicate with us. We can also leverage the same tech platforms that everyone else is using, and have the right teams to work with us and listen to the customer. I like to say listen to the customer a lot, because we want to force them to be who we are. We don't want to position ourselves to serve them the way they want to be served. It might need us to have some different segmentation of how we reach out to clients. We've seen in Nigeria, for example, that you need to target yourself in a different way, create the right persona, and create solutions that can support them. So if we're able to do this, then we have a bigger chance of engaging more. And we need to reach out to clients even before they're due for renewal. So what else can we do to these clients? It could be, sending anniversaries, not just birthday messages, but finding information, sharing materials, value adding to, other solutions to them could actually create engagement. I'll just stop here. So in case we have another contributor.
I think the question, if you don't mind, Tijsberg, the question of engagement for me is one of the most critical ones for us as an industry. When it comes to customer engagement, I've always made a point that we should not think of our competitors as other insurance companies when it comes to the question of engagement. Our competitors are the likes of Uber, Airbnb, Travelstart, where a customer makes 5 clicks and they've got the product. The car is coming to get you. Sometimes 2 clicks. And if our products still need someone to log on to our website and figure around until they find what they're looking for, particularly the younger generation, they simply lose interest and go on to the next website.
And Junior Rashid, I think that's a very interesting thought. And if we look globally, obviously, sort of China is a front runner in these engagement platforms or ecosystems or platforms more broadly. At the same time, when I think about it, sort of here in Africa, we have at least as deep rooted frictions as in China before Ping An came up with Good Doctor or Autohome or Loopbacks or any of their ecosystems. So what's holding us back to create some of these ecosystems? Because I think Ping An has shown us that an insurer can win. It doesn't need to be the Alibaba, Alipay tech or WeChat Tencent tech giant that reaps the market. It can actually be insurance driving the answer for our customers and for our continent. Any views on this, Dr. Karkesi?
Yeah, we should not forget that China is a planned economy. The so-called private sector you are mentioning, it's driven from the top. Everything, even where they are today, it is a reflection of what the top want. And then they will create that kind of ecosystem. So that's why I was saying that if our government do not do anything, I'm afraid that the push, which is pushing product to clients and removing all the obstacles of our unfriendliness, types of product, complexity, exclusions, lack of clarity, technicalities in insurance, all those things about proximity. Digital technology will help us to do that. But still, if there is no a concerted effort to do the orchestration which you have mentioned, thank you for that word, we will not go far. Number two, as a Junior said, we have to understand our societies, how they are working. So maybe our insurance penetration should be reviewed. I was thinking about, for example, I have so many people attached to me, relatives, blood relatives, who in case of a problem, they are insured because I will intervene. You understand? So those are some of the realities. And we have so many people in the rural area, when there is a drought or something like flood and so on, they will turn their eyes to the government, and the government will come give them seeds because they can't lose them. So the example of Morocco, which has started this year with the NatCat scheme, whereby if you take Californian households, it is said that there will be a big earthquake. Everyone knows there will be a big earthquake, and everyone is waiting for it. But only 12% of the population in California, which has fire insurance policy, has bought earthquake cover. So, but in Morocco, starting this year, anyone who has an insurance policy in property will be automatically insured in natural catastrophes, both man-made and natural, by adding 10% premium, which is a kind of compulsory move, and that only will create $500 million premium income. And it will help the government, because the government which pushed that together with the private sector, it will help the government to intervene for the other sectors which are needing an intervention of the government. And it will pull other people. We have to create the demand. If we don't create the demand, we can take even another 50 years by pushing product. Little will happen. Thank you.
Thank you. That's very helpful. And on that, maybe on pushing demand or creating demand, pushing products or creating demand, maybe we turn back to Suleimana. Suleimana, are you with us again?
Yes, I'm here, Tishbert, and sorry for the technical hiccup.
Great to have you. Great to have you. So, right, from your view on generating demand and creating that engagement, sort of what in your view is blocking that, and how do you see that as a challenger coming into this market? How can we take the next steps, or how would you want to take the next steps?
Okay, I'm challenger and partner as well, because we are new actors and we are partnering with the insurers. So what we believe in Assuraf and most of the new actors is that unfortunately the insurance sector has sort of lost its way in focusing on the customer, and that's what we really need to get back to, and to try and address the reasons why customers do not engage with insurance. And I'll name 4 of those. The first one is trust. People do not simply trust insurance. Why? The lack of clarity and transparency. We believe that insurance needs to be clear and simple. Simple in the words they use, to ban the jargon, the insider speak, the legalese, so that people know exactly what are the coverage that they are buying, which leads us to the claim process. To make the claim process more transparent. And the claim process usually, I usually say that if it's not clear at the subscription, it might drive claims issue, because people might think that they are covered for things they are simply not covered, or they haven't read, or they didn't understand exactly what they were taking coverage from. So the first one is trust. And this is one big pillar that is mandatory to try and increase the penetration of insurance. The second one is culture. We need to make a lot of effort in educating people, educating in financial literacy. What are the benefits? To really focus on all the communication touch points, so that the information is given to the consumers, and that they really understand what are the benefits. One other side of introducing things in the culture is maybe also the regulator to make mandatory some of the insurance guarantees. But that comes with the requirement of also strengthening and enforcing the payment of claims. If you make one insurance mandatory, at the same time, you should be able to make sure that the insured or the claimants are being paid what's due. The third pillar is access. And that's where comes the technology part. Although, it's not all about technology, because insurance needs to be omni-channel. It needs to be online, it needs to be offline as well. But technology helps put it all together in a platform that will reach the end customer, but that will also enable the distribution network and the distribution agents, so that they are more efficient in the way that they address the consumers, and also that some of the repetitive, dull tasks and information to the customer are provided by technology, so that the business itself can focus on a more critical business writing. So that will drive a lot of operational efficiency. The last part that I will touch on is affordability. Simply put, more than half of the population in our region is under the poverty line. So they simply cannot afford most of the insurance products that are being offered. And addressing the poorest and the least educated requires to design, distribute, and provide these insurance services differently. So microinsurance is one example. And also in this part, technology will also help build new business models, new products, and also to enable what's called embedded insurance, meaning to integrate insurance in some of the products and services that the population is consuming more. So I believe addressing these 4 pillars, obviously this is not exhaustive. There was a whole lot we can say about insurance, but from my perspective, these 4 pillars are the main reasons that insurers can and have to address.
And Suleimana, when you say that also sort of affordability, access. It's the same words I used and that Dr. Karkese and Mr. Ngulube and Rashidat Adebesi use. So why are insurance companies not succeeding in your view? Because, I mean, they think of the same problem, yet at the same time, we're still in the same situation. What's your view on what's blocking the progress of the insurance companies to actually address these issues?
Okay. On the affordability side, I believe insurance companies fail to address the mass market. And to address the mass market, they cannot address it with their current operations. Because to address the mass market, you need massive engagement. And that engagement cannot be through the distribution agents only. It needs to reach people where they are. And people are online. People are on social media. People are on other channels that they should be reached. And that requires to embrace technology, which is not happening for many reasons. Because most of the insurers, they don't believe in digital. I've heard that this year, 2021. One big CEO telling me, I simply do not believe in insurance, in digital. And also internally in their operations, they did not embrace digital workforce so that the workforce is enabled. Because most of the time, and if technology is not integrated in their operations, there is a lot of manual actions and tasks. There are also things that they're not providing efficiently to people. Just one example. Lately, we had a claimant that we were supporting, and the reason why the claim took time is simply because the underwriter who was manually entering the contract just forgot to enter that guarantee, simply. So technology would just help, streamline all of that and avoid manual tasks and errors thereof. So to again engage with the mass, they need to have more technology and be able to reach everyone. And technology can enable that.
And Suleiman, maybe very shortly, because I do understand that, and I do understand technology is an unlock, but at the same time, and I'm going to prompt you for a short answer so that we also have time to get back to the panel.
Yeah.
At the same time, we obviously see that sort of the technology penetration, the smartphone penetration or access to internet for quite a large part of Africa is not yet there. So how do you see that?
I've been a big advocate for internet penetration, but that requires education. People use internet, in our daily lives for, from e-commerce to social media mainly. So we need to educate people onto using internet for important things such as, important and functional things such as insurance. So that requires time, that requires education, and that education is not the core business of insurance companies. So they need to be partnering with actors and fintechs such as Assuraf. That's the only way.
Yeah,
Thank you for that. And
that's great.
Thank you very much for having me.
Can I ask one question to Suleiman?
Yes.
If every African has a mobile phone today,
Yes.
and they all have a product on accident, do you think they will buy immediately, all of them?
If they are convinced of the legitimacy, yes. If they believe in the legitimacy of the product and they can afford it, obviously they'll have it.
I'm sure today,
everyone has a telephone.
Millions of Africans have access to electronic payment, whether it is mobile payment and other things. Even government are pushing for that. So absolutely. That obstacle will be over very soon.
Absolutely. And I'll be happy for that. I come from the mobile world.
However, I doubt that it will make a big impact and we will reach South Africa where it is. Because South Africa did it without that.
South Africa is culturally different. But let's just say that in the poorest country, starting with the likes of microinsurance and mobile insurance will actually increase the culture of insurance. And someone who consumes insurance on his daily life is someone who, the day he will have a SME or a big corporation, will believe in insurance and also take insurance. So it needs to be across all segments. And if need to be started from the mobile insurance, let's start from there.
I think turning it, thank you, Suleimana, and turning it back to the panel. I think, Junior, what you're clarifying with that question is that digital and technology can be an accelerator, but on its own, it's not enough. Is that a fair summary of the question you're trying to ask? Because I think what you're saying is we also need to create that demand as per our earlier discussion. And how do we solve that question? And maybe turning that back to the panel. Any reactions?
I think I would start by saying that it all boils down to meeting a need. Someone once said that, show me a problem in society, and you've identified a business opportunity. If you look at how mobile money emerged, particularly in Kenya, it's not as if there was some massive research and then someone came up with the idea of mobile money. What happened is ordinary men and women in Kenya who had a need to send money from the city up country found out that you can actually send airtime to your grandmother in the village. And then they can sell that airtime to somebody else and get cash. This is how mobile money actually started. So the community which understood its need innovated around a technology that was new. So what felt need is out there, particularly in the poor communities. Maybe, for example, as Kone says, he is the insurer of his tribe, like I am. Why not design a product where I pay the premiums for the tribe? It would be certainly cheaper for me.
But I think that's a very interesting.
This is what I'm saying, that there is a need. And as insurers, we have to think along those lines. Then technology and ease of use and all that, ecosystems, these are facilitators. They will not create the need. They will not answer the need.
Yeah, great.
I think this is a very interesting thought, because actually what you're saying, Junior, here is that there is a need, there is an existing solution, which is Dr. Karakese is your family or sort of the people from sort of the place where you stem from. They rely back on you to be basically their insurance. And maybe the question for us is back to basics. If that is the need and those are the existing solutions, what role can insurance play to make those solutions that already exist more efficient? If it's a drought and the farmers already have a solutions, how can we facilitate those farmer communities to take those solutions to the next level? Is that part of where we need to go? Is indeed back to basics and thinking about sort of what our community needs and what is mutualization and socialization all about? Isn't that part of the answer?
Yeah, it is. One of the problem I have after working close to 30 years in insurance is time. We can speak, and take 20 years trying things. So time is really not on our side, because other sectors are taking a bigger portion of the $1 Junior has mentioned. So and we'll be left behind. So insurance is not popular in Africa, many places. It's not popular. We should not forget that even in the case of South Africa, I'm told that the association of unions, for example, and other things, because it's very easier for the government to put a law which will cover everyone who is an association of drivers of minibuses, for example, to have an insurance, to be protected in accident, personal accident. That only will make a big impact, and it's necessary, and it will be paid by the employers. There are a lot of things government can do, and it seems that the government doesn't understand. I'm not saying that we are not to blame as insurers. Of course, we have our own problems, but government should remember that when there is a problem in a society, they are the ones who are impacted. One day we went to in a parliament to defend a law on insurance, and one member of parliament took the floor and said, "Objection! These people from insurance, they are coming here to sell their insurance in our house." So you see that attitude. So even some laws, when they take laws about indemnization, it is always punitive to insurers. We should not forget that not only the population doesn't have trust in insurance, but also government doesn't have trust in insurance. So it is, everything we have mentioned is okay: digitalization, regulation, education, financial inclusion, but there is a need to make really a plan. Like we sit down with the government and we are all proactive and benevolent to develop that sector, which is very helpful for our societies and communities. Thank you very much.
Rashida,
No,
maybe
yes.
a view also from your side?
Thanks, thank you. I hope you can hear me. I sort of lost everyone for a moment. Okay, fantastic. I would just say to you, for me, I know we like to talk about the government, but I think we need to take a lot more responsibility because having the compulsory product doesn't necessarily solve the solutions. If people cannot see the value, we will not still be successful. And the key, for me, the real pillar is people need to see insurance in action. In Nigeria, in Africa, what we see is that they don't see it in action. When you watch something from the California fires, you hear about how much billions of dollars of claims will be paid. When you hear about the fire in Lagos, for example, you hear about how the government is going to contribute money for this. So this in itself, it's a big anomaly. And the more people see it in action, so if we're going to give them a personal accident solution and they don't see how it helped their friend, their cousin, their neighbor, it means that we still will not be successful as, as insurers. So one thing there is to really fix this, people seeing insurance in action, creating the right value proposition. We can't just sell. I mean, if government makes something compulsory and they're not enforcing, that's the typical experience we have. There's no enforcement. So if there's no enforcement, it doesn't happen. There's no value, and then people don't see insurance in action. So I would say primarily, if we can fix and make sure that insurance is in action, we start to bring the conversation to the table. We have to re-educate our people. We need to walk them through a journey. We're talking about behavioral change. It doesn't happen overnight. So I do appreciate that there's a lot of talk. I think that the talk should stop. And we truly need to act, but we need to invest as insurers in the right ecosystem. When you think about motor insurance, for example, do we have the right repair garages? Do we have the right networks? Are people experiencing it in a joyful way? If we're talking about personal accidents, how are we helping them to orchestrate the service, the care when it happens? So those parts are probably still missing, and I'm sure that addressing that can start us on a journey. But the only way we can do this is by collaborating. We're not collaborating enough. We all seem to want to sit in our palaces and work on things in our own space. So that opening up the barriers, opening up the closing of each other and collaborating a bit more and investing locally can truly make a big difference for us. We know that it's not copy and paste. We know that not everything that works everywhere. Mobile money has been successful in East Africa. It hasn't worked as well yet in Nigeria because our nuances are different and what we need are different as well. So I think the last point I'll make is that let's think about the hierarchy of needs. When we look at the hierarchy of needs, when we look at where our population is, what is most important to people now? If I have my right health, mental and physical fitness, then I can chase financial fitness. Then I can chase many other things. Rather than just selling the products we want, we truly need to find where like Junior said, you know, the need is essential. And the need is there. We're seeing them more and more, but we need to also be bold enough to invest. I'll just stop there. Thank you.
Yeah, and I think that's I mean it's a very good challenge, and I think where we come out is sort of this balance of where government needs to subsidize if there's real pull from a market and there's real value for a customer, a government can step in. And I think Junior, you said it very nicely in the beginning, as how can governments show that help the insured. And increment the value, basically double it up, versus help the insurer. And I like that notion a lot. One other thing that is popping up on the chat, and maybe for a brief reaction to the panel as well, is a question around sort of this requires our workforces to build new capabilities. But how do we train our people in an environment where sort of there is a lot of pushback as well. So how do we create a continuous professional development for our employees?
I think if I can come in there, Tasbet, for me, the whole game of being in a profession is about growing your competencies as you go along. As the operating environment changes, new technologies come in. One has to adapt and pick up new competencies. Without divulging my age, when I started working, we used to write a letter and lick a stamp and post the letter. And that's how it was. But if you compare it to what business is like today, with the fintechs of this world, any professional insurance person who is not updating their competencies as they go along will probably fall by the wayside. And I think this COVID experience was a very good learning or test, because suddenly we found ourselves not being able to go to the office. And anybody who could not operate a laptop from home without the IT boys helping you, suddenly you find yourself running the risk of being irrelevant and unemployable. So competencies is what we need to be growing as professionals, as the industry we are in evolves and technologies evolve.
Thank you, Junior. I think we've reached our time. I thought this was, I really would like to thank all three of you, Dr. Karkese, Rashidat El-Bissi, and Junior Ngulube. I would also really like to thank Suleiman for his contribution in the interview. I thought we had a very rich discussion. We didn't solve this problem, which is around already for more than 30 years. So it would have been a surprise if we would have solved it. At the same time, I like this notion that we reached of sort of the balance between when a government can actually help and how can we increase the value to the insured by selectively stepping up from a government to add to what already an insurance does, instead of, and Rashidat, you referred to that a little bit, of stealing the shine away from the insurer and trying to make it the virtue of the government itself. I think there is some unlock in there. There's much more needed around both affordable access, around the right solutions, and really understanding frictions. And I think from my side and from the Jeune Afrique organization, thank you very much for sharing your thoughts here. For the audience, please stay connected. The rest of the program will show shortly with the next sessions, and we hope you stay tuned. Thank you very much for joining us.